Good morning. This is Japanese Economic Review Channel. Let's review yesterday's market action for Monday, July 27th. The Nikkei 225 staged a solid rebound, closing at 64,931 yen, up 320 points. The Topix also gained 54 points. Despite some early volatility and topside resistance, the Japanese market demonstrated resilience, buoyed by easing global tensions and a late-day recovery in the technology sector. A primary driver yesterday was the significant shift in geopolitical risk. Reports of Pakistan mediating between the U.S. and Iran triggered a sharp drop in NY crude oil futures. This immediate price retraction helped ease broad inflation anxiety. Consequently, we observed a distinct capital rotation, where funds flowed upward into defensive and value equities as macro-level fears receded. Yesterday's session highlighted a divergence from the U.S. market's performance on July 24th. While the NY Dow had risen on defensive buying, the Nasdaq fell due to Intel's Q2 earnings disappointment. Although Japan initially faced this U.S. drag in the morning, the market eventually decoupled from the tech-heavy weakness in the U.S., finishing the day with a broad-based rebound. Japanese tech showed notable resiliency yesterday. Despite the negative sentiment surrounding Intel and ARM holdings, Asian momentum triggered a reevaluation of domestic AI and semiconductor stocks. The Asian pivot, marked by South Korea's Kospi turning positive and Taiwan's TAIEX narrowing its losses, provided the necessary catalyst for the Nikkei to regain its footing by the close. Regarding yesterday's intraday pulse, the Nikkei peaked early at 65,220 yen. After a midday trough caused by profit-taking and topside resistance, we saw a distinct late-afternoon recovery. This pivot was driven by the recovery in broader Asian indices, leading investors to reevaluate the technology sector and neutralizing the morning's selling pressure. Market breadth yesterday was exceptionally strong. Nearly 90% of the prime market advanced, with 1,397 stocks rising against only 139 decliners. Trading volume was high at 2.269 billion shares, with a total value of 9.355 trillion yen. This high level of liquidity suggests broad-based participation and returning confidence following the geopolitical relief. Looking at yesterday's sector performance, 29 out of 33 industry sectors advanced. Leaders included air transport with JAL and ANA, and gaming giants like Nintendo. Rubber products and services such as Recruit HD also performed well. Conversely, some individual heavyweights like Shinetsu Chemical and Chugai Pharma faced selling pressure and finished lower. In the growth market yesterday, we saw a selective rally. Leading equities like Cover and Mono A, I saw gains. However, the segment remained bifurcated, as companies like ChatPlus and Architects faced declines. This indicates that investors in the emerging sector are prioritizing specific growth catalysts and proven business models, rather than buying the entire segment. Strategic corporate moves were also in focus yesterday. Epson announced an additional investment in a South Korean inkjet startup, and Tokyo entered a partnership for flying car infrastructure in Thailand. Oki also introduced a new solution for educational support. These actions reflect a continued push by Japanese firms into global technology and next-generation infrastructure. Finally, yesterday's corporate reports highlighted ongoing product innovation. Morinaga Milk announced a new ice cream launch, and Yoshinoya introduced a premium pork offering. LIXIL also launched an art integration project for lifestyle enhancement. These moves demonstrate that companies are aggressively pursuing new ways to capture consumer interest in a stabilizing market. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.